So the number of unique wallet addresses on Fantom has absolutely exploded at the same time. Ethereum has officially become deflationary, all thanks to one new cryptocurrency coin. Yes, in this video, I'm going to show you how you can get free money. You can mint free cryptocurrency. There's loads to get into, guys. I'm going to explain exactly what this XEN token is that everybody is speaking about and what it exactly entails. Don't forget to smash the like button. Don't forget to subscribe as always. Check out the links in the description to BYBIT and BitGet if you want to buy any of these cryptocurrencies. And we've got a huge week ahead in crypto. We've got the FOMC meeting, we've got job openings figures, and we've got non-farm payroll. So this is going to be a hugely volatile week here for crypto. I'm going to give you my update on what I expect to happen this week and my best guess of what I'm seeing in the chart. So don't forget to smash the likes and subscribe. And as you can see, this is the chart for XEN token, right? XEN. Check it out. It launched earlier in October. And you can see it's been the 4th week now of just red. But what is going on? Because this is what it's done to the Fantom unique address wallets. It's absolutely rocketed. You can see here you were sitting at about 3.5 million here on Fantom. And the other day when XEN, I'm going to call it XEN. If I'm wrong, let me know in the comments. XEN launched on Fantom. It skyrocketed up all the way up here to 5.5 million with 865,000 new addresses created on the Fantom network on one day. Now, the good news for Fantom is they were able to absorb that. Nothing happened, didn't have any downtime. There were no issues despite a huge ramping, right? Adding on 50% new wallet addresses in 24 hours. That is insane on Fantom. But also, this is something, XEN is something which is taking up 50% of the block size at its peak on Ethereum. And it was the reason why Ethereum touched upon being deflationary for a second for the first time since the merge. Yes, so the XEN token has meant that there are more transaction fees that are going through. I'm going to explain why shortly, but it means that because of EIP 1559, you were getting more burning of Ethereum tokens than issuance. So officially you had your moment where it was deflationary, and it goes to show you that it does work post that merge, which is fantastic. But what is this XEN? How does it work? Well, let's break down what it is. Basically, what this is, it's a bit of a social experiment as far as I'm concerned. I think what this is it trying to be a real community-backed decentralized money, very similar to Bitcoin, but without a cap and without any pre-minting of tokens. The reason behind this, and this is an ex-Facebook founder who set this up, as seems to be every single project at the moment these days, some sort of ex-tech founder. But what they've gone ahead and done is you can then mint as many coins as you want, as long as you connect Web3 wallets. So you don't need mining equipment, you don't need computational power. The network is powered by you paying the gas fees on your network. So this has been happening on Ethereum. You can go into the Ethereum, you click into your XEN app, right? You connect your Web3 wallet, and then what you do is you go ahead and you mint free XEN. And what it will make you do is it will make you wait the term time. So in this case, 404 days, you start minting, and then what it shows you is that you'll be able to claim that once that term time is finished, and it'll just land in your wallet based on your C rank, okay? How long you have to wait, and that's how many people in the queue. Okay, so basically, you really are getting this free money. Now, whether this ends up having any value or not long term, we don't know. As you can see, clearly not over the last few weeks, but for the longer term, we don't know. But the computational power is coming from you paying your transaction fees. So for example, if it's on Ethereum, I think at the time you're paying $3.50 in gas to get yourself the XEN token. So that's the value you're placing on it. But now that they're opening up on different networks, Binance Smart Chain, Polygon, Avalanche, and recently on Fantom, like we've just covered off, people are able to mint these tokens far cheaper, right? Because the transaction fees are minuscule on the Fantom network, for example. So you're seeing a lot of people really creating new wallet addresses, which is what they're doing here, to then mint. Remember, there's no limit on the number of wallet addresses you can mint. So you can spin up a new wallet and you can keep minting these XEN tokens. But here's the thing. People are then going ahead and staking this XEN token. So apparently you can achieve, I've not seen this, I've not used it yet. Apparently you can achieve up to 20% APY. So you're getting people who are waiting the full term time, getting their maximum amount of XEN, putting it into stake, and then putting it back in their wallet, creating a new wallet, and repeating. So that is how they're making their free money. Okay, so there you go, guys. That is what's causing this big up ramp in Fantom. You're seeing huge uses on Ethereum, making it deflationary, as we saw, and they're spinning out on various other blockchains. So very, very interesting. Do I think this is going to be huge in terms of an investment? No, I don't think this is a great investment grade opportunity right here, given the dynamics of the tokenomics and what they do. Remember, there's There's no max supply on this. Okay, people can mint as much as they want. There is no cap, but the good thing is there's no pre-mining. So it's not like somebody sat there, a founder is sat there with all these tokens ready to dump onto the market. That's not how it's working. You can buy and sell on exchanges, okay? Like you can see here, this is the BitGet chart, and you can see here over the last few weeks, it's just been steady downward trend. I don't think this is a great investment. That could change in the future. Right now, it definitely seems to be a bit more of a social project of whether people will go ahead, mint, claim that token, and then see if it has any value going forward. So that is the Gen token. We've also got a hugely packed week coming up this week. You see, Bitcoin is just selling off here around 20,500, but we've achieved a very, very important few candlesticks here on Bitcoin. I'm going to show you this on the 4-hourly because I shared with you guys previously that I was worried about something on this 4-hourly chart. What I was worried about in particular was seeing a double top pattern. Okay, now whether it would have been an M pattern like this, whether it would have been an inverse Adam and Eve where it curls over like this, I did not want this to come back to 20,000, and still there's a slight risk of that. Now, over the last couple of 4-hourly candles, you had this really good candle, but then you've had a weaker candle coming in now closer to market opening. So I do want to see what happens here. The key for us is going to be posting a higher high. We've got our low there. Hopefully we can create a higher low here and finish that off. And then I want to go post a higher high. At the moment, we've not, right? We've topped out at this level at around about the 21,000 level. So we need to really go and push through. If you remember this ascending triangle pattern, which we were in, is if you take this continued trend line and just continue it along, it's now acting as resistance, right? This is the same trend line which was acting as support. Very normally, it acts like resistance. So we need to be wary of getting to this line and getting above it and working our way to 22,000. Now, there is something which can either make or break this happening over the next 24 hours. So the FOMC meeting starts tomorrow. Yes, Tuesday, but it's Wednesday when we get the official interest rate decision, plus the much anticipated and more important in many aspects press conference from Jerome Powell. Let's take a look at the Fed rate monitor tool, because the Fed rate monitor tool shows us that the market continues to show a little bit of the population are expecting 50 basis points. Now it's falling a little bit, which is good, because I was seeing this climb up and up and up, and I was like, hang on, the market is going to be disappointed. So why am I saying that's good? Well, if the market starts to believe, if this creeped up to 20, 30, 40% of the market believing and pricing in that we're going to see a U-turn of 50 basis points, and then we don't get it, which is my expectation, I think the Fed are going to come out with 75 basis points and continue to be quite, keep their foot on the neck of the markets, then we would have seen redness. So it's good that 87%, and hopefully this can creep back up to 90% over the next 24 hours or so, are pricing in the 75 basis points, because I think that's what we're seeing. Now, what's interesting about this time in the market is normally we would have had our non-farm payroll figure recently before the next FOMC meeting. In this case, we don't, okay? So we've got the FOMC meeting, which is happening on Tuesday, okay? You've also got your job openings figure, which is really, really important. Remember, Jerome Powell wants the number of job openings to start reducing, so it's at parity. The number of people demanding jobs is equal to the supply of jobs, and therefore you get this parity and you don't get this inflationary effect on wages where employers are desperate to bring people in. Okay, now what you want to see and what we're seeing here is we've got the Fed meeting on Tuesday, but then on Friday you get your non-farm payroll. So we need to be very, very careful here because the data comes out later in the week. That could give us the idea that perhaps Jerome Powell will need to keep his foot firmly on the markets. If he softens this up too early, and then just a couple of days after his interest rate flip-flop, the market then shows that, we're in trouble, then he's not left himself in a great situation at all. So I think he's going to go for 75 basis points. I think he's going to continue to be quite hawkish in his comments, but we will be listening out for that, because if he does show anything, if he shows any signs that maybe in the December meeting, we're going to see a U-turn. Remember, the next meeting after this is December the 14th. If he shows any inclination that we could see some sort of talk of pausing or talks to that effect during the press conference, the market can take that in a positive manner. We'll be keeping an eye on that as well. But overall, we're seeing good strength here. And I think that's the story we are taking away here from Bitcoin. I think if we want to simplify this chart, and I just go over to clean a chart and remind you here of this W pattern, this is what we're trying to form, this big W pattern. And as long as we can keep our next leg here to the upside, as long as we can keep this next leg working its way to the upside, breaking through 22,000, which is going to be our next key level, and then working our way to a neckline of around 24,700, that is going to be the key. But remember, do not be surprised to see if the market doesn't take too well to Jerome Powell's hawkish comments. That's the key. Now, what could cause the market to tank heavily? Well, for the market to tank heavily, Jerome Powell would need to come out with 100 basis points increase in his rate hike. I don't think he's going to do that. I don't think he's going to do that. I think he's going to come out with 75 basis points and keep things hawkish, but that shock 100 basis points would really, really panic the market and completely dump this market. The other thing we need to be very, very aware of right now in this market is this dollar index. Remember, we've been monitoring this for a long time. And let's just zoom into this thing here. And what we can see is we did break the trend to the downside. Okay, we predicted that quite nicely here together, and we saw the breakdown. But what did I say? We've got to get that clean break below our EMA ribbon. But what are we seeing here? Strong strength now from the dollar index. And this reminds me exactly of this previous period here where we broke down briefly and then shot all the way up to post a new high here on the dollar index. So I'm being very cognizant of that here, and this could easily bounce back and show some strength. And remember, this is inversely correlated to crypto. If this shows some strength, then other Bitcoin and altcoins can suffer. Now, let's get a quick update on Fantom as well. Bitcoin is slightly down today, but we are seeing altcoins show a bit of strength, and Fantom is one of those. If you take a look here on Fantom on the daily chart, we have had 1, 2, 3, 4 strong days in a row here, and it's been parabolic. I mean, look at the chart, the line I've drawn there. That is a hugely parabolic line. If I switch that to the 4-hourly chart, look at the strength there on Fantom. Really good strength, now working its way back to that 24-cent mark, and this is showing that it's primed and ready to go. It's just waiting for permission for Bitcoin. Bitcoin needs to work his way to 22,000 and break beyond that and complete that W pattern which we've been monitoring. If we can get that to play out, Fantom is showing that it's one of those coins primed and ready to go here. I mean, this is a real good strength here. It's filled the gap as we expected. I mean, if you take that now from the bottom there, you were looking at a return already up to there of 30% from the bottom. So congratulations to anybody who's been dollar cost averaging. And this is the powerful thing when you're dollar cost averaging during a bear market. I mean, you can see many major altcoins now bouncing, Avalanche up 5% today. You're seeing good moves here. And that is based on the fact that you're at such suppressed levels. And when the market gets a sniff of getting ready to rotate, you're going to see that fear and greed really start to rotate in. I mean, you can already see here, we're sitting at 31. It feels like a long time ago that you were sitting at 20, let alone when we were back at 8 on this fear and greed index. So the fear definitely dissipates quickly and the FOMO kicks in disproportionately quickly. So we have to be very, very cognizant of that. So there you have it, guys. Really big week coming ahead for crypto. It's all going to be based on this FOMC meeting, whether we see 50 basis points or 75 basis points. Hope you guys enjoyed this video. Don't forget to smash the likes and subscribe. Don't forget to go watch my Algorand video here, because in this video, I explain exactly how many Algorand tokens you would need to become the next cryptocurrency millionaire. Thanks for watching, guys, and I'll see you in the next one.